I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 29th of October 2023. I'll be doing the weekly market review. So let's get started. Starting with the DXY, we have the weekly chart. As you can see, last week was pretty much a consolidation, but we formed the long wick here, the long discount wick, and we took the sell side liquidity. I'm expecting the weekly constant of this discount wick to be treated as support, which is also overlapping with the weekly fair value gap, this weekly fair value gap. So I don't want price to be closing on daily time frame below the weekly constant accomplishment. And I'm expecting higher prices. Going to the daily time frame or the daily chart, as you can see, we took the sell side liquidity that I've highlighted here. This sell side liquidity, we've swept that, we run up higher, took the buy side liquidity, created the fair value gap, we worked inside the fair value gap. This is the 2022 model that was taught by ICT. There's the fair value gap, and I was aiming 2 weeks ago. I'm still aiming for this buy side liquidity, which is the internal range liquidity, and this buy side liquidity, which is the external range liquidity. So now I'm expecting price to rally up higher towards this buy side liquidity and towards this buy side liquidity, and it was really animated to the upside to this buy side liquidity, which is the weak consequent encouragement. You can scroll to the past and you can see it. This is the level. So this is what I'm expecting for DXY. Going to ES, here reviewing the weekly chart on the continuous contract. I have switched to the continuous contract, which is adjusted to the current contract changes to view more price action in the past. As you can see, we reached to the weak consequent encouragement and we took the sell side liquidity perfectly, as I've been calling weeks in advance. Since we were trading here, I was expecting price to work inside the fair value gap as a retracement and this bearish order block, and then to complete the run lower. So when price has reached to the weak consequent encouragement on this week, I've highlighted the weekly consequent encouragement, and you can see how price has treated the weekly consequent encouragement as resistance to the tick. I wanted to go to your charts and measure this level right there. It will be the 90.5, and you can see what is the high on this week or last week's high. You can see that it's absolutely to the tick of the weekly consequent encouragement discount wick. This is how the precision can be very scary, and this is actually the characteristics of the last 3 months of the year: October, November, December. It usually give us, and September, October, November, and the first 2 weeks of December usually are the characteristics of a market that is very precise and it wants to give us large movements in price. And you can see here the precision, how it just showed us the precision here by treating the weekly consequent encouragement of this discount wick as a resistance to the tick, and then reversed from there and took the sell side liquidity. This is precision right there. Now, what I'm expecting in the future is there's a small fair value gap that was recently created here as a result. So price can, and we have a bearish order block. So price can retrace and work inside this small inefficiency. I didn't highlight it here to keep the charts clean and to work inside the bearish order block. If we close below the bullish order block mean threshold, the mean threshold of this bullish order block. So if you take your Fibonacci and you measure from the high, from the low to the high, you get roughly the midpoint. The midpoint is called the mean threshold for the order block or the breaker mitigation blocks. All of these BD arrays, the midpoint is called mean threshold. For the fair value gap, it's consequent encouragement. So if we close below the mean threshold of this bullish order block on daily basis, on the daily time frame, I'll be expecting price to be we're running lower towards this sell side liquidity. Right there, we have relative equal lows. So if we close on the daily time frame below the bullish order block mean threshold, it is as a confirmation to me that we are like most likely going to be reaching to these relative equal lows down there. But honestly, like we can see a retracement now to work inside the fair value gap. So I've mentioned what I'm expecting. We can see a retracement, but here it's like if then equation. So if we close below the bullish order block mean threshold on daily time frame, I'm gonna be expecting price to reach to the relative equal lows. If not, I'm gonna be expecting price to retrace and work inside this small inefficiency or small fair value gap and the bearish order block, and then it can give us the confirmation from there that it wants to trade lower towards the bullish order block mean threshold and close below it to reach to the relative equal lows, either or. So right now we're just sitting on our hands. We're demanding more intel from price action to see where it wants to run next, and based on that intel, based on that information, we'll be able to be working in this market. Going to the daily chart, as you can see, this is the bearish order block. We have a fair value gap here. Price can retrace on a short term, very short term, can retrace to the fair value gap and to the bearish order block, and then it can resume going lower to close below the mean threshold of the bullish order block. Also, you can see the weekly consecutive closement. There was a fair value gap overlapping with it. You can see here Tuesday, we formed the high of the week. Tuesday high of the week, Friday the low of the week. And we've seen that weekly template unfold perfectly. So that's pretty much it for ES. Going to NQ, here we're viewing the weekly chart on the continuous contract that is adjusted for the current contract changes. As you can see, we also swept the sell liquidity here, and we walked and closed below the weekly fair value gap that I've been calling out for weeks in advance now, since we were trading here, and these relative equal lows or equal lows have been formed. I've been calling the market that it is gonna be trading lower to take out these lows right there. As you can see here, I believe we have a very small inefficiency or not, but I'm expecting price to be treating the low of the weekly fair value gap here as resistance that can potentially send us lower to this weekly fair value gap, which is this fair value gap or this imbalance between this candle's high and this candle's low. There is a small fair value gap that is not filled yet, so market will want to make it efficient by balancing to it, and then we can see price, if it was really animated towards this weekly fair value gap, we can see it run towards this sell side liquidity right there, which comes at this level. Going to the daily time frame, as you can see, we have formed two up close candles. They can be considered as bearish order block, and we have a fair value gap. Price can retrace up higher to work inside these levels, and also the relative equal lows is also a BD array. It can work inside this area and accumulate more shorts, and then run for the weekly fair value gap. And you can see at the high of the weekly fair value gap, there's sell side liquidity overlapping with the weekly fair value gap. So it's high probability for price to be reaching towards that level, to be accumulated, to be running the sell stops that are being residing here by the retail and the large funds. So that's pretty much it for NQ. Going to Dow. Here we're viewing the weekly chart on the continuous contract that's adjusted to the current contract changes. As you can see, we have swept the sell side liquidity, and we've reached to the weak closement as I've been calling out for weeks in advance, as I mentioned. And we were close to reaching to the sell side liquidity, but we didn't reach to it yet. So I'm still expecting lower prices towards the sell side liquidity and towards the weekly fair value gap that is just below the sell side liquidity. So if it reached to sell side liquidity, how far can it go further lower? You have this weekly fair value gap. You can look at the high consequent encroachment and the low, and you can look at the quadrants, the 25 and the 75 levels. So these are levels that can price reach to it after. So if you ask me how far can price move lower or reach lower further than this sell side liquidity, I've just called it, I've just mentioned it, the weekly fair value gap, the high, the low, the constant closement, and the two quadrants, the 25% and the 75%. These are the levels that price can be reaching to them after taking this sell liquidity. And if it was really limited and closed below it next week, below this weekly fair value gap, I'll be expecting price to be reaching to this sell side liquidity right there. Going to the daily chart, as you can see, we broke lower last week. I've been calling this implied fair value gap. Many of the people don't know what's implied fair value gap. It's basically the consequent closement of this discount wick and the consequent closement of this premium wick. In the future, we've seen some reaction there. As I've been calling out last week, I've called out that we can see reaction at this area. And you can see how the bodies are respecting it. There's a small fair value gap here. So I have expected a reaction to be there before even this fair value gap was created. This is Monday. So on Friday, we closed below the implied fair value gap. And I've called out that we can see price treat this implied fair value gap. That was just, you see, this implied fair value gap last week, we didn't have any fair value gap here. So we closed on this candle right there on Friday, right here, we closed. So this is Monday. Before Monday even started, I drew out the implied fair value gap levels, and I've called out in the last weekly review. I'm going to be attaching the last weekly review. You can watch it and you can look at the Dow analysis, and you can see I've called out that we can see reaction, we can see resistance at the implied fair value gap. Even before Monday's was there, I've called it out. And we in fact seen price trade up higher on Monday, closed here, created a fair value gap, traded to it here, Tuesday high of the week, and then we traded lower, taking the sell liquidity. We formed three touches, clean lows. We swept them there, we run the sell liquidity. Now we have a bearish order block inside the fair value gap. This is a high probability price can retrace to it, work inside this area, and then run lower if it wants. But if it was heavy to the downside, it can leave this unfilled to be treated as breakaway gap. So I'll be expecting this gap to be left as a breakaway gap, which will be sending price even further to the downside. So that's pretty much it for Dow. Going to Euro USD, also known as the fiber. Here reviewing the weekly chart. As you can see, last week we have been rolling up higher, but you can see the bodies are respecting the weekly fair value gap and it didn't close above it. So like next week or in the future, I'm still expecting lower prices. And I want to see the consequent approachment of this premium wick to be treated as resistance, which is also the bearish breaker low. So the bearish breaker low is approximately the consequent approachment of this premium wick. Going to the daily chart, as you can see, we have an inversion fair value gap here. I want to see price close below it. You can see very long wicks here, but I want to see price close below it on daily basis, on daily time frame. Why close below it? You may ask yourself this question. Why is he requiring price to be closing below the inversion fair value gap? Good question. I'm going to be answering it. We have this down close candle here, the bullish order block. I want to see price close below the inversion fair value gap low because it is the mean threshold of the bullish order block. So once price close below the mean threshold of the bullish order block, as I've mentioned earlier on ES, if price wants to close below the bullish order block, the mean threshold of this bullish order block or the midpoint, it's gonna be sending me signal or a confirmation that we're most likely gonna be reaching lower towards at least the rejection block or to the sell side liquidity. And the same thing is mentioned here on EU. If price wants to close below the mean threshold of this bullish order block, which is the low of the inverted fair value gap. So these both of these levels are converging together at the same level. So if we close below it on daily time frame, we've seen a closure below it. I'll be expecting the inversion fair value gap to be treated as resistance that can send price lower to take out these two sell side liquidity relative equal lows and this sell side liquidity. So that's pretty much it for EU. Going to pound USD, here we're viewing the weekly chart. It's also known as the cable. You can see that on GU, it's been heavier to the downside. We're not seeing the higher high here. You can see in EU, there's a higher high. But on GU, it's a lower high, which means it's more heavy to the downside when compared to the EU. EU is like refusing to go lower. You can see here we have lower lows. EU, we have higher lows. So this is more heavier to the downside. It's trying to reach to the sell side liquidity, but it's being held by DXY or the US dollar index. So next week, I'm expecting the consequent approachment of this premium wave to be treated as resistance that can potentially send us lower to the sell side liquidity. Going to the daily chart, as you can see here, we had a buy side liquidity here. We run this buy side liquidity. This is ICT bearish pattern number 1. You can go to his core content and you can see it. This is perfectly what is there. We walk inside this favor gap, daily favor gap, and then we traded lower, took this sell side liquidity. So we took the buy side liquidity, made this area efficient, and then we run for the sell side liquidity. And then we later on retraced, work inside this favor gap. So at the beginning, we had the external range. We walked the external range here, the sell side liquidity, and then we retraced, walked inside the internal range, the favor gap. Then we run up lower, took the external range here. We have created a favor gap as a result in the internal range liquidity. We retraced, worked inside the internal range liquidity. Now, what do we expect? We expect the price to work inside the external range liquidity. What was the external range liquidity here? Since we're in a bearish institutional order flow, we are constantly looking for lower prices. We don't try to pick the bottom or the top. So here, in this case, in GU, we're expecting, or we are in a bearish institutional order flow. So we don't try to pick the bottom and try to say, oh, it's not going to be running for these relative equal highs. Sure, it can do that, but we're sticking to our narrative and to our institutional order flow, which is a bearish one. So if it run the sell side liquidity here, the external, and then it retraced and worked inside the internal, we don't have any more internal range liquidity to be worked inside of it. So we have a favorable gap and we perfectly work inside this favorable gap. So what is the next destination for price? Since we're looking and holding our bias and our narrative with the bearish institution order flow, we're most likely going to be reaching price or expecting price to be reaching lower to the external liquidity. We have the sell side liquidity, and roughly, which is in close proximity, we have a sell side liquidity also over here. So we have these both sell side liquidities that are residing there. I'm expecting price to be trading lower to reach for them. Also, if you can see, if you can measure from this high to this low, this is a bearish order block, you can see that the mean threshold of this bearish order block resides at the high of the weekly favor gap. So we don't want to see price close on daily basis above the weekly favor gap, which means if it does that, it means that's going to be taking up these relative equal highs. But if we stay below the weekly favor gap, I mean, it can wick through it. It can have some coloring outside the lines with the wicks, but I primarily want to see what the body is respecting the weekly favor gap and just staying inside this weekly favor gap area. The wicks can obviously run up higher to make more damage in price action and to accumulate more orders by smart money, which will they offset them below these lows, which are the sell side liquidity. So that is what I'm expecting in GU. I'm expecting price now to be walking lower, reaching to the external range liquidity here, since it has worked already inside the internal range liquidity, and I want to see price in terms of closing basis to respect the high of this weekly favor gap and to treat it as resistance. Otherwise, if it closed above it and we've seen the characteristics or the signature price action that it wants to move higher, the next draw liquidity is going to be these relative equal highs. Otherwise, I'm still aiming for these lows since I'm in a bearish institutional order flow and I'm not trying to pick the bottom nor the top in the XY. So in the XY, price is still in a bullish institution order flow, which means we're still looking for high prices and we don't try to pick the top in the XY. And the same thing is diametrically opposed on the other forex, which is the EU and the GU. We're in a bearish institutional order flow, so we don't try to pick the bottom and we say it's going to be running up higher from here and it's going to be the quarterly shift. No. So that's pretty much it for this weekly review. I just want to add some notes that next week we have NFP on Friday, so you better finish your business on Wednesday, London, or Wednesday, New York. That's going to be your max or your last chance of trading. So you're going to be closing the shop by Wednesday, London. Uh, excuse me, Wednesday, New York, and you can just study liquidity and how price moves from buy side liquidity to sell side liquidity, and from sell side liquidity to buy side liquidity, from internal to external, and from external to internal, from premium to discount, and from discount to premium, etc. So unless you know your model well and you know how to trade it and when to trade it and how to trade it, you can trade after NFP, you can trade before NFP. But the main thing is never trade ahead of NFP. So if, let's say it's Friday, and don't trade before 8 or before the NFP, because it's going to be the highest amount of manipulation in the marketplace. So I hope you find this helpful or important for you. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.